About to leave, already packing. Come with me, I'm not really asking. We'll get away to a place where we don't know. About to see the world in action, what we can be, life with no distractions. We'll get away, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free with me. Let's be free with Not looking back, eyes on the freeway, Bonnie and Clyde, a classic cliche. We're on the run, this is what we waited for. Take my hand, we'll make it somehow. We can't miss out. I'm done living life with the lights out. Die with my own doubts. Be free.
Good afternoon, everyone. It's 4:30 on a Thursday. It can only mean one thing. It means it's the latest in our series of live study streams for GCSE Business students. I'm Jim here at TTUHQ, and I'm joined today for this session by Pete, who is in the middle, which must mean that Mike is on the right. So good evening, gents.
Good evening.
Jim.
Oh, that's good. I can hear you. And we can hear you, which is even better. So, here we go. Session 2. Now, the aim of these sessions is, over the course of this term, is to give GCSE business students, particularly in Year 11, a chance to recap, to revise, consolidate some really core concepts and topics that we know from past experience underpin good answers and strong assessment performances in the mocks and assessments, and hopefully the real exams too. So we're really pleased you could join us live if you are live here on YouTube or TutorTube. If you're watching on Catch Up, welcome too. We've had over 600 students watch on Catch Up since last Thursday's session. If you're live, you get a chance to use the live chat window to add your comments and responses and answers to the activities that Pete and Mike have put together in this session. Got quite a few calculations, I think, Mike and Pete, haven't we, as well? So it might be worth just grabbing a calculator or smartphone to hand. This session looks like it's got a lot of calculations in it.
Definitely worth having a calculator nearby, and definitely worth giving it a go. Answers in the chat window, please.
Yeah, absolutely. Put them in the window. Of course, don't forget to scribble your workings down as well if you're having a go. If you watch on Catch Up, of course, it's a bit easier because you can pause the video. Give yourself as long as you want. Don't take too long, but give yourself a bit more time and then start the video again to see how your answers compare with the worked answers that Peter and Mike will take us through. I think we're almost set to go because a lot to get through today. So The only thing to say is there are some slides and some information on here which we call exam gold. Don't worry about writing it all down. You'll be able to download all the slides, the whole session, from the link we'll give you at the end, and print it off or add it to your notes. So don't worry about capturing everything and writing it all down. Lots of time to do that later. I think we're good to go. Should we make a start?
Definitely.
Yeah, let's go.
So we're going to start with the big reveal. And your task here is to try and work out the name of the business hidden behind the question mark before all of the clues are revealed. I'm going to give you 5 clues. You can pop your answers in the chat window. You can have as many goes as you would like. We'll have clue number 1, please, Jim. So this organisation, its products are sold in 200 countries or territories worldwide. Products are sold in 200 countries or territories. Give it a guess. Put your answers in the chat window. We'll have the second clue, please, Jim. Got Apple being guessed there. This organisation, this company, its purpose is to refresh the world and make a difference. Purpose to refresh the world and make a difference. It's not Febreze. Clue number 3. Haven't seen the right answer yet. This company owns both Innocent Smoothies and Costa. They own Innocent Smoothies and Costa. Those are 2 of their brands. A bit of a delay here on the chat window for me, but some answers coming through. Let's have the next clue, please, Jim. Its most popular drink was invented by a pharmacist in 1886. So it's a drinks company. Jasmine has gone with Coca-Cola. Let's have a look at clue number 5. This company changed the image of Father Christmas to the one we have today. It was down to this organisation as to why we have the Father Christmas in the image that we have today. Any more answers? A few more seconds, but I think we'll reveal the answer here, Jim. As Jasmine correctly deduced, first of all, she was first. It is the Coca-Cola Company. Really well done. Thanks for taking part. That was our little warm-up. Peter, I'll hand over to you for the next activity.
That was great. Thanks, Mike. So what we have here is a bubble quiz. You're going to be shown a question, and there are going to be a number of answers shown on screen. You need to identify by putting the letters in the chat window, A, B, C, D. What are the correct answers? So there'll be no correct answers, or there could be all 4 statements could be correct. Let's take a look and see what our first question is. So, how many of these are right? Revenue can be successfully calculated by which of the following formulae? Let's see what our thoughts are. Answers in the chat window, please. Are they all right? Is it only one or 2? What are they? If you type the letters that you think are correct into the chat window, and let's see what people think. Always important to be aware of what your formulas are. Starting point in terms of all calculations. It's always worth writing them down as well. You might not necessarily get a mark for them, but it's going to guide your thinking along the way. So D seems to be coming through thick and fast. Do we think it's any more than just D? Is there another way to work out revenue? Thanks for those who've contributed so far. Let's take a look, Jim. A and D are correct here. Okay, so the one that we'll be most familiar with is selling price per unit times the quantity sold, the number of units that we sell. But if we take a look at A as well, we can rearrange the formula. If we've got profit and total costs, we can add our total cost to the profit that has been generated in a given period of time by the business, and by doing so, we'll work out the firm's total revenue. So just be aware that information could be presented to you in a number of different ways, and it's important for you to be able to rearrange formulae and work backwards to achieve a specific outcome. Okay, let's take a look at the next question. So we start with revenue. Which of the following may result in the revenue of a business increasing? So we had our basic knowledge there to calculate total revenue. Which of these answers will result in revenue increasing? So we're applying our knowledge here. What do we think? And some answers starting to come through. Are any of these ones correct? B, C, and D, says Jasmine. Thank you for that contribution. Quick off the mark. And we've got someone else chipping in with A. Lani and Gavesh both say A. Or all of them. Maybe. Let's take a look. Because they've all been covered there. Well done. Okay, they will all result in an increase in revenue. If you change the selling price, other things being equal, revenue should increase. Okay, if we increase promotion, that obviously generates more awareness on the part of view of our customers. Developing and launching new products, well, that's another way to hook potential new customers in to whatever our business is selling. If it's Coca-Cola, it might be a new flavor. If we think back to what our big reveal was, and selling existing products into new markets, maybe a business is adopting a strategy of going international, finding a new market, and that should, other things being equal, see revenue increasing too. Okay, let's move on to the next slide, please, Jim. So we've got some key terms that it's really important that we're aware of, and students sometimes use these incorrectly. And whatever your assessment is, or when the final exams approach, you need to be sure that you're confident of what these are. So revenue is the value of money that a business makes from selling its products. Okay, so try to avoid phrases like by increasing the selling price, the business will generate more money. The business will generate more revenue. You need to use your subject-specific terminology. We've looked at before what the formula is, selling price per unit times the number of units sold, and alternatively, we can work backwards and use the other formula that we saw, total costs added to profit. Okay, I'll now hand you over to Mike.
Thanks, Peter. Next activity is called the 30-second challenge, and there's a good reason for that. We're going to give you 30 seconds to solve the calculation on the screen. So using the graph, using the data we're provided with here, using the graph, calculate the average monthly sales revenue of the business across the 4 months. The selling price per unit is £10. Here's half a minute for you, or 30 seconds if you prefer. There we go. 30 seconds is up. Apologies for the music not working there, but it was still 30 seconds. Answers coming through. Remember, with calculations, important to show your workings because you may still be able to get some credit even if you don't get the final answer correct. And it's also really important to give these a go. Don't worry if 30 seconds wasn't long enough. If you're able to do this in 30 seconds, then very well done. But 30 seconds in an exam situation may be a little unrealistic. But answers coming through now. General consensus here. Let's have a look at the answer on the screen, please, Jim. So we're asked to calculate the average monthly revenue across the 4 months. Well, the data we're given on the screen here, we're told the number of units sold. So we can add up the total number of units sold, which is 150 plus 200 plus 150 plus 100. So that will give us 600 units sold. We're asked for the average monthly sales revenue, not the average monthly sales volume. So we multiply the 600 by 10 to give us 6,000 in total. That's the total revenue across the 4 months. Divide it by 4 months and we get 1,500. And I think that we had several correct answers there. Lani, Gavesh and Jasmine, I think, were the first ones in. Let's do another one of those then, another 30-second challenge. So here we've got some information in a table, and we're asked to calculate the sales revenue the business generates each week. Let's have 30 seconds on the clock. Here we go. Last few seconds. And there we go. 30 seconds is up. So we're given some information in the table. We're asked to calculate sales revenue the business generates each week. I'll give you a few more seconds. Here come some answers. Radhika's given us an answer, and Path as well. Different answers here, maybe a slightly more challenging question. 2 or 3 different responses, different possible answers I can see here on the in the chat window. Let's have a look at the answer, please, Jim. We'll reveal that. So the correct answer, as I think Path was the first to give us, is £1,400. £1,400. So in order to work out the weekly sales revenue, we need to multiply the daily number of customers by the number of days that the business trades. So we multiply 8 by 5, and then we multiply that by the selling price. So 8 by 5, and then multiply by the selling price. I think some of you got the answer wrong there. We're forgetting that it asked for the weekly sales revenue, so you hadn't multiplied by 5. But 8 times 5 times 35 is £1,400. Well done if you got that right. Good question, Path. We're going to look at that right now. So Path has asked, why do we have the costs if we are not working out the profit? Good question. Here's some exam gold then. Revenue is not the same as profit. And it's important to remember that they are distinct concepts. Many students get these confused. To calculate profit, we need to take away total costs from revenue. So revenue and profit are not interchangeable. In that last question, the total cost information was included in the table as a distractor. Okay, it was there. It was more than you needed. The weekly revenue could be calculated successfully, as many of you were able to do, without using that information, multiplying the number of weekly customers by the selling price. So you don't have to use all information provided in a question to successfully calculate the correct answer. And that's really, really important and worth remembering. Read each question carefully. It sounds obvious, but you need to read each question carefully and ensure that you include the appropriate units or pound sign or percentage sign if they are not provided. So read the question carefully, select the information that you need, bearing in mind that you may not need all of it, and then show your workings and get to the answer. Well done, everyone who took part in that. Let me hand you back to Peter.
Thanks, Mike. Some really impressive tips there that I know some students in the past have probably been no doubt caught out with. What we've got here are some MCQs. You've got 2 statements on screen. What you need to do is read them through carefully and then decide whether statement 1 is true and statement 2 is true. If you think that's the case, put A in the chat window. If you think statement 1 is true but 2 is false, can you put B in the chat window? If you think 1 is false but 2 is true, then it's C in the chat window. Or if you think that both statements are false, can you put D in the chat window, please? So statement 1, examples of fixed costs include rent, salaries and insurance. Statement 2, examples of variable costs include rent, salaries and insurance. So what do we think? Answers in the chat window, please, folks. Core knowledge of costs here and how they behave, a really important GCSE subject. Okay, Lani's the first one with an answer here. She thinks it's B. Any other thoughts? Path with B as well. A couple more seconds and we'll see if we have any more contributions. Gavash and Jasmine both say B. Let's take a look at the answer, please, Jim. Indeed, we're spot on. Statement 1 is true, 2 is false. Fixed costs, key thing to remember is they don't change with output, and we'll address some of this shortly. So let's take a look at our next question. Okay, same principle again. Statement 1, the total costs of a business will be 0 if it produces no output. Statement 2, the fixed costs of a business will usually rise if it increases its level of output. Okay, so if you think 1 is true and 2 is true, that's A. 1's true but 2's false, that's B. 1's false but 2's true, that's C. And if you think 1 and 2 are both false, again, it's D. Let's see what we think. We had 100% success rate last time. Let's see what we think this time around. Again, it takes a little bit of time to read these options through, so don't worry if that's the case. The level of engagement's excellent. Lanley thinks B. Path admittedly they're not too sure, and Gavash D as well. If you're not sure, Path, we will go through the explanation shortly. Jasmine thinks C, so there's a bit of uncertainty on this question. Let's take a look at the answer, please, Jim. Okay, D is what we're looking for here. Statement 1 is false. Statement 1 said the total cost of a business will be 0 if it produces no output. Well, the reason that's false is that all businesses have got what's called fixed costs. So an example of a fixed cost, as we saw before, was rent. Regardless of whether or not a business produces anything, it still needs to pay the rent to its landlord. The landlord will still demand that regardless of whether anything's made, whether it's pizzas, pies, whatever the product might be in question. Okay, so those fixed costs need to be paid regardless. If it increases its level of output, the fixed costs won't rise. That rent will stay the same. However, if output increases and I own a pizza shop, my variable costs will increase because I need to buy more boxes, more dough, I need to make more dough, etc. Okay, so those per unit costs will rise. Those variable costs, not the fixed costs. Next slide, please, Jim. So I've just alluded to this. A variable cost is one that directly changes with output produced. So here you've got a key term and a really accurate definition that you can use in assessments and exams going forward. As well as being able to describe that key term, it's also important that you're aware of any calculations involved. The session's all about finance. If we want to calculate total variable costs, we need to know what our individual variable costs are. I mentioned the example of pizza boxes for a pizza shop before. So if I want to know my total variable costs, I'll take my variable cost per unit, my variable cost per pizza in this case, and I'll multiply it by the total number of sales, our total level of output. Alternatively, if we're missing some information, which we might be, we can look at our total costs, and if we subtract our fixed costs from that, we will be able to calculate our total variable costs. Next slide, please, Jim. Fixed costs. Okay, so as I said before, they don't change as output changes, even if more is made. These fixed costs will stay the same. An important caveat here that some students forget is that over time, everything's variable. Okay, so fixed costs can change over time. So a landlord might renegotiate rent on a premises after 5 years. They might increase that rent. So that's got nothing to do with output increasing or changing, however. So again, if we have our total variable costs and our total costs, we can work backwards. We can calculate our total fixed costs. So we're just going to take the total costs and subtract our total variable costs. So one last key term coming here for you folks, and it is an explanation of total costs. These, of course, represent all the costs incurred by a business. And to calculate the total cost, we take the total variable cost and we add the total fixed costs to that. Okay, I'm now going to hand you over to Mike.
Thank you, Peter. Our next activity is called Categorise. I'm going to give you 60 seconds to separate the phrases you can see on the right of the screen under one of two headings. Decide whether you think they're fixed costs or whether you think they are variable costs. So categorise the 8 phrases you can see on the screen into fixed costs and variable costs. Going to give you a whole minute on this one. No music on this either. Answers in the chat window, please. You can just put numbers to go with fixed or variable. "15 seconds more. Thanks for the answers coming in so far. And there we go. So that's 60 seconds up. A few more seconds for those of you still typing. We've got 8 phrases. We need to decide whether they are fixed costs or whether they are variable costs. Thanks for the contributions so far. Remember what Peter said to us just now, the definitions we got. Save yourself typing effort by just agreeing with previous people who have contributed. Let's have a look at the answers then, Jim, please. They don't divide up equally. Okay, so we've got fixed costs and we've got variable costs. Fixed costs don't change with output, but variable costs do change with output. So rent and interest payments are going to be fixed. They're not going to be influenced or affected by the output of the organization. And then we've got packaging, raw materials, component parts, wages based on the amount produced, commission and delivery costs, all of which are going to vary based on the output of the organization. The more they produce, the more packaging they'll require. The more they produce, the more raw materials and component parts they'll need. The more wages they'll need to pay to staff who are paid based on the amount produced, based a piece rate. The more commission they'll need to pay to salespeople selling the product, and the more they'll need to pay on delivery. So variable costs vary or change with output. Fixed costs do not. I will hand you back to Peter for our calculation countdown.
Thanks, Mike. So you've got some cost information and some output information on screen. Think about what we've just been going through the last slides in the last couple of minutes. We'd like to use this information to calculate the total costs of the business. So if we can start the countdown timer, please, Jim, and it would be great to see some answers in the chat window. Unfortunately, our suspenseful music isn't playing, but I can feel the suspense coming through as we're thinking again. The time that we're getting here isn't that long, so don't worry too much. Okay, only 30 seconds, not an awful lot of time. I'll give you a couple more moments to see if anything emerges into the chat window. It's unlikely, of course, in exams or an assessment scenario. Jasmine's got an answer. Well done, Jasmine. Okay, Lani following there. Okay, let's take a look at the solution. Well done, you two. There might be more coming. I'm just conscious of the time. Let's take a look at how we did it. So the first thing that we're going to do is we're going to take that 640, that's our weekly output. Okay, the variable cost per unit is £6.50. We're going to multiply the two together to get 4,160. We're told the fixed costs already, 2,500. We're going to add the two figures together, and the total cost of this business is 6,660. Great work, folks. We can take the next calculation, please, Jim. Another calculation countdown here. This time, not total costs, we're looking for the variable cost per unit. So this business has got 300 units. Total variable cost 2,250, total fixed cost 9,000, and total revenue 7,500. That's what we're given. So 30 seconds again. Let's see what we can come up with, folks. People are number crunching. If we can now add our answers to the chat window. Let's see what we think. We've got one answer come through already. Let's see if there's any more. Okay, let's reveal the answer, please, Jim. Okay, so we've got 2,250 is our total variable costs. We're told that 300 units are produced, and the answer that's coming through the chat window is £7.50. You'll be correct. Got a little typo, I believe, on screen there. £7.50 is the variable cost per unit that you need to calculate there. So well done. I'm now going to hand you over to Mike for some exam gold.
Thanks, Peter. Yeah, some exam gold here for you. I've just got to say, excellent contributions, really accurate contributions. And if you're able to do those calculations in 30 seconds, you're doing very well. Don't be alarmed if you need a little bit longer. So here's some exam gold points to remember. If you're asked to calculate total costs, you must remember to multiply the variable cost per unit by the output level to get the total variable costs, and then add this to the amount of the total fixed costs. It's quite common for students to make a mistake by only adding the variable cost of making one unit to the total fixed costs when they're trying to calculate total costs. Of course, that gives an incorrect answer, unless the business was, of course, making just one unit. The terms cost and price are sometimes muddled up as well. Price is the amount that customers are willing to pay for a product, and cost is the amount spent by a business making a good or providing a service. So price is the amount customers are paying, whereas cost is the amount spent by the business. Try and learn those and use those correctly. Now, I must hand back to Peter for the next activity because it's one of his favourites.
Yes, it certainly is my 10-second countdown, one of my favourite activities. So you're going to have 10 seconds, not a lot of time again. So the pressure's on to answer the question on screen. So if we take it away, please, Jim. Can you write down the formula for profit? 10-second countdown starting now. Just imagine there's some suspenseful music playing here, folks. We're getting ready to count down. Is anyone there? What is the formula for calculating profit? Core business knowledge here. Can you come up with two, possibly? And we've got some rapid responses within 10 seconds. Let's take a look, please. Okay, revenue take total cost, sales revenue take total costs. Okay, that's what I thought we'd come up with. Great stuff. Thanks, Jasmine, Parth, and Gavesh. You might as well be given the fixed costs and the variable costs, so you would take those two away from profit as well. So profit's the amount of money that is left after total costs are deducted from total revenue. We know that the formula is total revenue, take total costs, as you've just said. Excellent stuff.
Did you enjoy that one, Peter?
Loved it. Look,
yeah.
You know that's one of my favourite activities, Mike. It's an excellent one, isn't it? I'll leave you this 30-second challenge.
Thank you very much. So another 30-second challenge for you, another calculation. The task this time is to calculate the percentage increase in profit between this year and last year. We're given some data on the screen. Here's 30 seconds without music. Halfway. Well done. If you're still crunching those numbers, have a few more seconds. Put your answers in the chat window when you've got there. We're looking for a percentage because we're asked for a percentage change. Give you a little bit longer. Don't worry if 30 seconds is too ambitious. We'll have a look at the answer on the screen then, please, Jim. So we're asked to calculate the percentage increase in profit between this year and last year. We're not given the profit this year or last year. Thank you, Jasmine, for your answer. So first of all, we need to work out profit. Well, it's just as well that we've had a reminder about how we calculate profit. Total revenue minus total costs. So the profit for last year in blue there, £5,000 total revenue minus total costs of £3,000 gives a profit of £2,000. And the total revenue for this year is £6,500 minus the total costs for this year in the orange of £3,500 means that profit this year is £3,000. Percentage changes are often an area that students find difficult, find challenging. We're asked to calculate the percentage change. So what we need to do is just work out the difference between the old and the new figures. So 3,000 minus 2,000 is 1,000. We divide it by the original figure for last year. So 1,000 divided by 2,000 times by 100 is 50%. So well done to Jasmine and Talani for their answers. A bit more exam gold. 10% of the marks for GCSE Business are allocated to quantitative skills questions. The ones that you need to be confident with and are not attached to a specific part of the specification are percentages, percentage changes, and averages. So those three areas, percentages, percentage changes, and averages, aren't attached to a specific part of the specification. So they could come up just about anywhere. The key to success is, of course, practice. Practice using these skills, as they can be linked to a whole host of different topic areas, not just the calculation of revenue, costs, and profit. So percentages, percentage changes, and averages, good skills to learn. And you get there by practicing. Don't forget, you also need to be able to confidently interpret and use information that is presented in tables and charts. Okay, it's not just about carrying out calculations, being able to interpret figures that are presented to you in tables and charts. I'll hand you back to Peter for the next activity.
Okay, unfortunately, this is our last activity of the evening, and it's called Beat the Teacher. So you're going to be shown a paragraph. However, in the paragraph, there's some deliberate mistakes. Your challenge is to spot them. You might want to read through it and count up how many you think there are, and enter that as a number into the chat window, or enter what you think the errors are. Okay, so here we go. Can you spot them? Business is making a loss when its revenue is higher than its costs. A business will always make more profit if it sells additional units of a product without lowering its price. However, the total amount of revenue made will depend upon how well the business controls its costs. Businesses might want to make high losses so that they're able to reward the shareholders for investing in their businesses. So, I'll give you a clue. There are more than 3 errors that we're looking out for here. In fact, I'll be kind. I'll tell you that there's 5 errors in total. Let's see if you can spot where they are. Answers in the chat window when we think we've spotted some. Indeed. Me neither. Gabesh has come through with one. Thanks for the contribution. I'll give you another clue. There's at least 1 error in each paragraph. All right, here's Path with a correction, Gavesh with a correction. Great stuff, folks. Indeed, Jasmine, business want to make high losses is wrong. We know that the aim of most businesses after survival is they're aiming to maximize a profit, aiming to maximize profits. Let's take a look at the solutions, please, Jim. So the errors: making a loss. Well done if you identified that. Profit, of course, that was an error as well. And revenue in that second paragraph. Businesses want to make high losses. No, they don't want to make high losses. So if you identified that, very well done. And kept profit is an important source of finance. Okay, so the style of our terminology here, we've got to get it accurate, haven't we? Okay, so kept profit again is an error. Let's take a look at what the corrections therefore should be. So the corrections, you can see we've changed the color here from red to blue. Business making a profit when its revenue are higher than costs. A business will make more revenue if it sells additional unit of a product without lowering its selling price. But the total amount of profit made will depend upon how costs are controlled. So an important sort of evaluative statement there. Businesses want to make high profits so they're able to reward the shareholders and owners for taking that risk and investing. And retained profit, not kept profit, is an important source of finance. So regardless of your exam board and the assessments that you do, sources of finance come up time and time again. So again, that's a core topic area to be aware of. So it's been absolutely brilliant, the contributions that you've had from there. We'll end and hand back over to Jim in the studio.
Superb stuff. Yeah, I was just thinking on that beat the teacher activity there. There's two really nice links to sessions that are coming up next week. Break even. So what we've covered today in terms of variable costs, fixed costs, revenue, absolutely part of that, isn't it? It's the foundation for understanding break even. And then also you mentioned sources of finance, which we come back to in 2 or 3 weeks, I think. So it's absolutely spot on. It's all about just that confidence, isn't it? And that familiarity with these key terms and concepts, and then being able to manipulate the little formula to get to the answers. Fantastic answers in the live chat. Dead impressed, weren't you?
Absolutely superb. Very impressed.
Yeah, there's some great stuff going on.
Yeah, really good. So well done to all the students who joined us live. Some big numbers as well. And I would say 95% of the entries in the live chat window firing in there were spot on. And even when they weren't, we could see why maybe the answer wasn't quite what we were looking for, but you had a go. And that is the most important thing, isn't it? Practice, and building your confidence with these. Well done. If you enjoyed the session live, or if you watch on catch up and you found the session useful, don't forget to give Mike and Pete a thumbs up using the YouTube thumbs up mechanism. If you didn't enjoy it, don't forget to give the session a thumbs up on YouTube, just to help the YouTube algorithm find and discover and suggest this session for other GCSE business students. So next week it's break even, and we'll have 2 more of the team to present. By the way, a shout out to Graham, who may be watching, one of our colleagues. He's not well at the minute, but we're right with you, G. Looking forward to having you back on these sessions very soon. Anything else to say, Pete, Mike, before we sign off?
Just very impressed with all the contributions. Thank you, everyone.
Yeah, same from me. Thanks, folks.
Really good. Oh, I forgot to mention, of course, right, I mentioned at the start, lots of exam gold in there, lots of stuff to add to your notes. If you go to tutor2.net/live and use the business GCSE filter in the replay section, you'll be able to download the slides from this session right now. They're there to download. We'll make a change on that 7.5 to £8 or £8 error on the slide, so that the download will be correct. And fantastic. We'll see you this time next week. Next Thursday, 4:30 for GCSE Business. So for now, see you later.